Hello guys, welcome back to another video. So in this module we're going to talk about ICT Advanced Market Structure with order blocks. First of all, let's talk about what identifies an order block. So we can start from page 1. Okay, so an order block, a bullish ICT order block, is the down candle or candles before a bullish move. So if you can see, this is the first stage of an order block. This is the down candle before the upwards move, okay, before the bullish move. But if you see a group of down candles, that is also considered an order block as well. So if this was a 1 hour candle here, if this was a, let's just say a 15-minute candle, and this was a 15-minute candle, these would be considered as a 30-minute order block. So it's the single down candle or multiple down candles. You can group them together. After the price closes above the down candle, this confirms the order block. So you can see down candle, you tell yourself, okay, that's potential order block forming. And then we see the bullish move and it closes above this down candle. That confirms these groups of down candles as an order block. Okay, you could also use this one as well, but since they're grouped together, this is also confirmed. So both of them are confirmed. It really depends on how nimble you want to be. If you're a more loose trader, you can just use the group. If you want to really be precise, you can use this one. But sometimes being too precise means you might miss the move. So keep that in mind. So we have two ways to trade an order block after it's confirmed. We can trade it with an instant retest or rounded retest. So this is the two ways you would trade an order block. So after, an aggressive trader would use the instant retest, and a more conservative trader, where he needs more confirmation without like a market structure break, will use the rounded retest. So the moment price gets confirmed as an order block, instant retest is on the next candle or candles. Price will stab into the order block and rally. Okay, and you want to make sure you take profits when it does that, because it might come for a rounded retest, which would break market structure to the left first, or just simply have a retracement, something like this. It's not instant retest. A bearish ICT order block is the up candle or candles before a downwards move. So once again, if there's two consecutive up candles, you can classify that as one order block. Okay, that's where the extreme selling happened. When price was going up, the entities that move price, they're extremely selling into these up candles. Okay, and then they have displacement to the downside, which shows willingness, right? Just like an elephant in the pool, as ICT would say. That becomes confirmed when price closes below the order block, or even this one. Really depends on how precise you want to make it be. Okay, maybe if it's early in a session, like really early in the session, and you think that price could trade into this up candle during like a news event or something, then you could refine it like that. Okay, but if you just want to look for a general trade idea, you can just use the group of candles and not be so precise with it so you don't miss any moves. It's two ways to trade an order block. The first way is the instant retest, where you see it close and then it snaps right back instantly, and this is for aggressive traders. Or you could wait for a rounded retest, which would take some more confirmation, where you need, oh, okay, I need the premium and the discount, and I need a market structure break to the left, so it's a rounded retest. Okay, so that's how you would trade an order block. Instant retest for the more aggressive trader, rounded retest for the more conservative trader. You have to figure out, okay, what are you particularly? Because I'm not going to be able to tell you. Now let's talk about instant and rounded retests, and I'll show you examples. So here's the first stage. Can you try guess what retest we're going to have here? So we have a market structure break in the market. So here's our first example. Can you try guess what type of retest is present here? We're just taking our kilo. And you can see how do you see what retests might be possible here? Price is taking out a kilo and broke market structure. This is when we want to wait for a rounded retest. And sometimes in rounded retests, you have internal range liquidity pools. So if you can blend a liquidity pool with an order block, that makes it a high probability order block as well. So you can see that if we did draw a range from this low to this high, and within a discount, there's an internal range liquidity pool and an order block, that is a very good indicator for, okay, this is going to have a rounded retest, which makes this order block a high probability order block as well. You can see that rounded retest happen, takes out the liquidity pool into an order block that showed willingness to create a long-term low due to the fact that it's taken out stops here and broke market structure. Okay, very important you understand that. What about an instant retest? Well, let's say you see all these down candles here. If the intended move is up, they're actually buying every down candle. Okay, so an instant retest is the moment price closes above an order block and instantly retest it. And this is what I mean when you add all these order blocks together. This would be considered as one order block, because this is the daily chart here. This would be 1 day, 2 days, 3 days. You add them all together, and that's a 3-day order block. But if you use a single one here, that's a daily order block. And we all know that the higher time frame levels sometimes have more precedence over the daily. Sometimes, okay? It really depends on what you're looking at. So you can see the instant retest here. Closes above, stabs, stabs. This is not a rounded retest where it takes out liquidity pools more into a discount. This is just stabbing into the order block. And it prints another order block here. Right, so this is what we call institutional order flow, where we can see that down candles are going to support price, so we can expect this down candle to support price also. And you might be wondering, okay, why not use all these order blocks as well? Well, this is the most beefy range, right? All order blocks want to be beefy like this, because the true volume is in the bodies. So you don't want to be using order blocks like this, where they're just like dojis, because this is very indecisive. Use the down candles like this. And the moment price closes above it, this will now act as an order block. Similar to this. All these down candles, price closes above it, instant retest. Now we want to see the same thing happen at this down candle, at this order block. And we can see that we're getting a move. Okay, it's not a rounded retest, but it's an instant retest. And we'll talk about all the different scenarios that you can use this. So you see that the instant retest pushes price up, but you gotta be nimble sometimes. You gotta understand that just because it's an order block doesn't mean it's the low. Okay, just because it's an order block doesn't mean it's the long-term low. You need to understand that sometimes, okay, they did buy that, and that's a scalp, that's a day trade, that's a one-shot, one-kill. But the next week, they might just use the liquidity formed from that move and hunt that, right? As opposed to a level like this, where it's already hunted liquidity and broke market structure. This makes these types of order blocks more of a structure approach. Okay, since we have low, 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 we can anticipate a really nice swing points. Okay, as opposed to this order block here, sure it provided buying, we could have made money on that move, but look what it left: internal range liquidity from the clean lows, right? So why do people fail with order blocks? An ICT order block is a candlestick pattern. All candlestick patterns, such as fair value gaps or retail chart patterns, will fail if they are opposing the institutional order flow. Therefore, the reasons traders fail with ICT order blocks is that they are failing to trade aligned with the financial banks and institutions. I highlighted this red because that's exactly what you want to be doing every single fucking day, every single fucking week and month. You need to identify where do the banks and financial institutions want to move price, and your main goal is to trade with that. Because if you're doing a trade against that, you can just consider that as a low probability trade. And why people fail with order blocks is they're taking too many low probability trades. And if they did less and only focused on high probability trades, then they'd actually find way more consistency in their trading. So if you are trading an ICT candlestick pattern or retail chart pattern that is aligned with the banks and financial institutions, the pattern will have success. And I want you guys to realize that also retail chart patterns will work if they're following the banks and financial institutions. And that's why you'll see bull flags work sometimes. And the only time they work is if they're aligned with banks and financial institutions. But to identify what these guys are doing easily, we need ICT interbank methods. Alright, so if we just try to follow the banks and financial institutions with retail chart patterns, it wouldn't become successful. But retail chart patterns that follow the banks and financial institutions are successful. But get to the source, guys. The source is interbank ICT methods. That will give you exactly what's going on in price, the fucking narrative of what's actually printing on the charts, and that's why you can see so many interbank traders with consistent results and just really good trading with amazing logic and reasoning. It's not random. So, what's the keys to selecting order blocks? By understanding that candlestick patterns succeed if they are following institutional order flow, the key to selecting order blocks is then by determining what the current institutional order flow is. How do we do that? Well, what support levels are holding? Are lows holding? Are highs breaking? Let me draw this out. Okay, so if support levels are holding, support can come in terms of OBs, gaps, and liquidity. If all those things are holding on the way up, you can say that institutional order flow is bullish, right? And you also want to see the resistance levels that trade against it are breaking. That supports the idea of bullish order flow. Bearish order flow is just the complete opposite. This is when you'll see resistance levels holding price down with order blocks, liquidity, fair value gaps. It's holding price down, and you'll see support levels to the left, they'll just break. to the right, sorry, they would just break. So what are you currently seeing then? Are you seeing bullish institutional order flow, or you're seeing bearish institutional order flow? This should do the thinking for you, and it should also take off a lot of pressure you might face as a trader. So if you're a person that can't really hold trades for a long time, it's because you're not trusting the order flow to do its job. So you have to desensitize that. You have to trust it, and then over time you do it over and over and over again. You'll eventually just trust it. We can determine the institutional order flow by determining what the narrative is. Okay, so the narrative comes from a long-term perspective, and then that will provide us the institutional order flow to use on the intermediate term perspective and even lower. So narrative can be found from a long-term perspective, and since the banks and financial institutions operate on the higher time frames. So let's talk about how narrative creates framework. Narrative aids framework. Narrative helps us create a directional bias for the upcoming days or weeks. Knowing this helps identify institutional order flow, which tells us which levels are supposed to break and which levels are supposed to hold. So what's the narrative here, guys? We have a kilo from the monthly chart, which is a support level, and we can see that confirmed with a market structure break. What's the institutional order flow here then? We can see that down candles are sending price up higher with displacement. Down candles are sending price up higher with displacement. So that's the narrative, bullish, because these down candles are pushing price up and resistance levels are breaking. Highs are not acting as resistance. They're getting closed cleanly above, and we have followed through every single candle. So we're going to use this monthly level here. Since we know that institutional order flow is bullish, we're going to use this monthly level here as our next support level. Because remember, this is a down candle, yes, right? But the more price trades into a premium and expensive markets, you'll see that sometimes the order blocks do fail and require to trade back down into a discount and find that key order block. So this order block here is really expensive, but when price trades lower, these order blocks become cheaper. So since we're on the monthly chart, we can refine this one on the weekly chart, and you can see that it gives us a nice dealing range to work within. So the dealing range has a bunch of liquidity for price hunting into a discount market, but the down candle we identified on the monthly chart, since it's on the monthly and since it's really cheap here as opposed to these premium order blocks, this is going to be very significant. Okay, so we can see that we have 3 drives lower. What does this do? It really just traps the FOMO shorts. Every time price trades below a low like this, it traps the FOMO shorts, then it squeezes them, takes them out. You gotta understand how to feel and think like a market maker. So when we have another low like this, and price breaks out like that, FOMO shorts are going on in the market, and we can squeeze them into key levels such as this, and these are even clean highs as we'll go into the lower time frames. Okay, also back into premium market. So this is all narrative, guys. We're going to refine that on the daily chart. So into that monthly level, we have a stop hunt, and this we can act off. This is what we can key off on the daily chart. We have a low taken out, and you can see that the aggressive order block gets printed, and the aggressive order block it's tested here, and where we're going to draw towards, guys, what we outlined on the weekly. So we're blending both perspectives. Okay, so that's the next draw, clean highs, and a weekly fair value gap. Then your bias is bullish. When do you change that bias? When we start going to a premium, we start hitting premium levels. Alright? So that's all narrative. And now with narrative, framework becomes a lot more easier. Okay, you can see that the market structure shifts in the market have context. The imbalances and displacements you see will then have context. The order blocks you see will then have context. This is how you don't confuse yourself. This is how you get complete clarity in your trading. And then this is why I created the walkthrough. I want you guys to realize how to trade with these concepts with complete fucking clarity. Excuse my French. So displacements make sense, okay, because it's following the narrative. Stop hunts make sense because it's following the narrative. Order blocks make sense because it's following the narrative. Resistance levels breaking. Why? Because we identified the narrative first. The narrative is, okay, we're an extreme discounted price. We've taken out another low, which is extremely cheap here, and we broke market structure. Narrative told us that. So all these candlestick patterns follow the institutional order flow generated from the long-term perspective, which is what we just covered. We can only then start classifying swing points and selecting the correct levels to take action on. Like I said, market structure makes context. This has context. Clean lows. If we see clean lows, and we know that the market likes to seek them, we want to use them as buying opportunities. And then we can blend them with high probability levels like this. Especially on the framework of a long-term low. Since we classify our lows, we know that, okay, that long-term low shouldn't break. Especially with the market structure break, confirming it. Then you want to wait for intermediate term lows. So intermediate term lows is classical and rebalance. This is rebalance because we hit this fair value gap. Do we see confirmation? Yeah, we do with the market structure shift. Off of that rebalance fair value gap, do you see this order block printed with an instant test? Then this one comes more for a rounded retest, right? And on the rounded retest, that action in itself also creates a intermediate term low, classical one, because we have a low here and a low here. So I'm going to clean this up a bit. So by this rounded retest happening and the market structure shift, this created a long-term low. I mean, intermediate term low, a classical one. Apologies. Framework selects order blocks. So with the help from narrative, we have directional bias, and we can classify our swing points. So long-term low, rebalance, intermediate term low, and classical term lows. The intermediate term swing points will give us the framework. When choosing order blocks, we want to establish an intermediate term swing point first. So what are the two intermediate term swing points we have? We have a rebalanced swing point and a classical swing point. After an intermediate term swing point has been established, we can use order blocks to get in sync with the institutional order flow. So we understand this low should keep, and if this rebalance gets filled, that creates a rebalance order, rebalance long-term intermediate term low. I get these words mixed up, my bad. So after that intermediate term swing point has been established, look at this down candle and how price has an instant retest of this. And the conservative trader that requires more confirmation in terms of the market structure shift, look at this rounded retest. Then the rounded retest created that classical intermediate term low. And then check out how the order blocks are then getting used to get in sync with the institutional order flow narrative that we have an idea. We want to see price trade higher, right? How is it going to do that? It's going to use order blocks to send price up higher. And then that's when you see 2 down candles here, you could be buying there. 2 down candles here, you could be buying there with a gap. There's 2 down candles here, you could be buying that, all the way until price trades back to a premium, or until your narrative says, I'm not sure what's going to happen next, so I need more information. Here is rebalanced intermediate term low, and you can see that this is a rounded retest. These down candles will use the same price higher. These down candles will use the same price higher. And that's how you do it, guys. That's how you use order blocks to get in sync with the narrative and with institutional order flow. There's also a hierarchy to order blocks. There's a parent order block, the order block that creates the swing, and subordinate order blocks, which you want to view as speed bumps. This is the low formed. We have more detail on the 1 hour chart. I'm going to wait for an intermediate term swing point to give us a framework to work within. And once that intermediate term swing point forms, like this one, these order blocks are the parent order blocks. Okay, so they create the swing, right? And these are key because they give us the framework on this low here. So you don't want to see an intermediate term low break, especially when it's keying off this. So that those intermediate term swing points and the order blocks they form are going to create the parent order blocks. Subordinate order blocks are these little speed bumps. So yes, this is a parent order block, but look at these down candles, right? They're just used as speed bumps to send price higher, because price can't go up with just green candles. It needs to walk there. It needs to walk higher. And speed bumps, you must trust that these are going to send price up higher. So whenever you see price come down against you, the algorithm is kind of designed to do that, to instill as much emotion in you. But you just got to be comfortable and trust institutional order flow and trust these subordinate order blocks to send price higher. But you want to frame the majority of your trades of the parent order block, because you know that those are going to hold. And these parent order blocks, if you get stopped out on those parent order blocks, it's because it means something. It's a key stop out. It gives you more information on what's going to happen next, as opposed to just randomly getting stopped out because your stop was too tight. There's a difference, guys. So the purpose of a parent order block is to create the intermediate term swing point. The purpose of a subordinate order block is to send prices higher or lower towards the drawn liquidity. Intermediate term swing point and institutional order flow. Intermediate term swing points and institutional order flow. Intermediate term swing points create swings that lead to higher time frame objectives. So the drawn liquidity that we have, the short-term targets that we have, every time price creates an intermediate term swing point and it confirms, those are the lows that are going to send price. It's going to generate a swing in the market. So if you can see that this is a rebound low, you can see it generates a swing. after this classical low was formed, it generates a swing, right? Rebalanced low generates a swing. And this is displacement, guys. And it has context because of what we've outlined on the narrative. And the narrative is to trade higher into premium to where the magnets are, or where you have to rebalance, and where we also have to take out the clean highs. After the intermediate term swing point forms, we can expect price to have displacement towards our levels, and subordinate order blocks are used to send price higher. We want to trust price action to trend towards the high time frame objective with institutional order flow. Institutional order flow, and no parent order blocks and subordinate order blocks, and the purpose of the both. Intermediate term lows, especially when they're established, should not be violated. Like I said, guys, this is market structure from an interbank level. And market structure kind of tells you what price is going to do next. So if you're expecting bullish prices like this, but then you see rebalance lows breaking, that's not a sign of institutional order flow being bullish then, right? Signs of institutional order flow being bullish is highs breaking, lows holding. And if a low did get taken out, then it trade right up higher again. Like this, these lows here. It trades right back up higher. So if price did close below an intermediate term low, from a market structure standpoint, then that's a sign that there's a potential reversal in the market. So every time these lows get taken out, you should never be disappointed, because there's no such thing as 100% trading. And there's no such business that only makes profits. Every business out there, a restaurant, hotel, whatever, there's going to be a cost of business, right? So whenever we take a loss, we know why our loss happens. It has so much logic and reasoning behind it. So that loss is not really a loss, it's a cost of business, which is amazing, since we understand our losses and we can use them to better our trading. Also, if you frame your trade base on an intermediate term low or classical low or rebalance one, right? Any intermediate term low, if you frame your trade off of that, then you should be comfortable with your stop being below that low. Because since it's an intermediate term low, it should hold. So if you see yourself getting stopped out before every move too early, try this next time. Try framing your trades, hence the name framework. Frame your trade off an intermediate term low first, and then start looking for trades. So an important reminder: the closer we get to our objectives, the lower probability the subordinate order blocks become. Right? So the closer we get, imagine we start trading in the premium now. These subordinate order blocks are just speed bumps. They're not really an intermediate term low or parent order blocks. So they don't have much significance. So if we do trade higher into oversold, overbought conditions, you gotta be aware that those might actually not hold. It might need to have a rounded retest. Okay? A rounded retest. This is because price trades more and more into oversold, overbought conditions, which is premium discount. Okay, so it's always important to be aware of premium and discount conditions. That's how you have high probability trading. So now let's talk about framing a setup with high probability order blocks. And we can start off with framework and narrative. So how does framework and narrative make a high probability order block? So framing a setup with high probability order blocks. Before we start finding setups from a short-term perspective, we must use the framework from the intermediate term perspective. Therefore, a violation of the intermediate term low will be a cost of business with logic and reasoning. So we're not really looking for entries on the intermediate term perspective, we're looking to create some sort of idea here. We're looking to create ideas on the intermediate term perspective. Then with those ideas, we go into the short term perspective and we execute on it. So we can create a very favorable risk to reward situation. So when you want to frame your setups as well, you want to mark out the daily ranges, all right? This daily ranges also gives context between these frameworks and when you should see price expand and when it doesn't. All right, you can always see that these, majority of the time, these intermediate term lows form during important hours, right? This one, yes, as well, since you can see that it doesn't rally until midnight. It starts to rally, you see? So you gotta make sure that, okay, this is a low formed outside of important hours, but look, it doesn't move yet. It starts moving inside of important hours, right? Otherwise it wouldn't be consolidating. So now let's talk about fair value gaps and liquidity and how they make a high probability order block. So now that we're in an intraday short-term perspective where we're looking for entries, remember, we all want to frame our setup off an intermediate term low, okay? So that's what we frame the setup of, intermediate term low. Why is this an intermediate term low? Because of the fair value gap. Okay. Now we can understand, okay, what's going on here in the short-term perspective as well. Well, we consolidated overnight in the larger session. Then this move right here broke below these lows, which is sell side liquidity in form of previous day's low and intraday's lows, induces shorts in the market, and this is all happening within a bullish context narrative, right? So when you see this stuff happening, but you know that on the long term is bullish, on the intermediate term is bullish, you should see these moves as trapping people, right? If you're just staring at the 15-minute and you saw that, you would be, oh, that's a market structure break, and I'm going to short the retest of that. That's because you're only looking at the 15-minute chart. But since we've done a top-down analysis the fucking proper way with clarity, we can see that long-term perspective and intermediate term perspective is bullish. So these moves shouldn't phase us, and we should be doing the quite opposite. So that forms the low. Now we can start looking for order block setups. As you can see that this down candles with upward move, it gets confirmed, right? And we can also see we have a rounded retest into that order block at optimal trade entry area, right? So this is oversold in terms of the range here. That's where you want to select your order blocks. You don't want to be selecting order blocks in the premium, especially when we're creating that intermediate term low. Alright? Then we can use subordinate order blocks to send price higher. But this is creating the parent order block. And then we can see subordinate order blocks sending price higher. And here as well, sending price higher. Where? To the short inducements liquidity. Now to make the order blocks even more high probability, right? The 15-minute is what ICT calls the bear weather. If you don't like to take this trade, because this might be a bit this is like 2R. If you want to make it like 5R, 3R, then you're gonna have to refine it, right? So if you don't like the risk model, the risk to reward model on 15-minute, then you can always refine it on the 5-minute, right? But following the framework on the 15-minute now, right? So you can see that we can shift down perspective. This is short term, but we can shift down perspective in the short term for more detail, right? You see what I did there? So now we can see that this creates a very nice pattern. We have a low taken out, you have the market structure break, trades back down into optimal trade entry into an order block. But look what we have here. We have 3 drives, internal range liquidity, and we also have price hitting a fair value gap, right? If you missed that, no worries. Since we know that institutional order flow is bullish, we'll just do the same thing with future down candles, right? Low, market structure break, trades back into optimal trade entry, and we can see that this had a fair value gap with it. Right, so I know I'm rushing it, but take your time and really study these charts. Okay, so you can see a more clearer perspective here. And what's our drawn liquidity? Well, we have a gap here, right? So we know that gaps want to fill, especially when we had. I emphasize this point over and over again. Narrative and framework is bullish, so we should see these gaps as targets as well. We should see the liquidity pools as targets, right? And we can see fair value gap here, internal range liquidity, speed bumps and price higher. So these are parent order blocks in terms of the short-term perspective since price high. What also makes a high probability to order block? Time of day. Let me start by saying this. If you're looking for order blocks outside of time theory, you're simply pissing on your own feet. Please don't look for order blocks outside of a kill zone, because like I said many times, these markets are designed to move specifically within these hours. And the most important thing is to trade aligned with the banks and financial institutions. But if you're trading outside of kill zones, then you're not doing that. It's as simple as that. Morning session creates a low, an important low as well, right? So all these key lows are formed in kill zones that do their business well around these hours. So bring back everything from the previous slides and bring it to this point here. This swing point is going to form in an important time of day, such as the morning session or afternoon session. So we also want to be framing our exits within time theory as well. So if you can see on the chart, we are about to hit that daily range close with the vertical line. So that's when you want to be looking for an exit strategy blended with price action, and that's why we have price running out the short inducements liquidity. So this would be a perfect exit for the daily range with entries found in the morning session and afternoon session. So how is this set up conservative? We have a low, we have a market structure break, and we have a return optimal trade entry. Do you see the rounded retest? Right? So rounded retest is for those more conservative traders. We have a low here, market structure break, we turn back into optimal trade entry with this order block, fair value gap, internal range liquidity, with time theory. So many factors to make you trust this order block, right? Not to mention the framework here, and the narrative from the dailies. So many factors. So rounded retest happens, and then since it's the end of the day, you want to close it, right? So it's outside of time theory, that's when you should close, especially when we're taking out short inducements liquidity. Now the aggressive trader, they're going to have a better risk to reward, since their stops are going to be a lot tighter. So here, invalidation level is below this low, because it's the fair value gap, the keying off of. Same trade would be net you 5R. But since conservative will have looser stops, since their stop is based on this here. Aggressive, they're basing their trade based on the order block or fair value gap. So here they're basing on the fair value gap, entry here, stop below here. Same thing here. You can also be aggressive with the order block So the down candle that forms the intermediate term low. You can see price stabs here, here, here. So all of this is what you would have to withstand its heat, but your stop is protected nonetheless. You can see that provides a high risk to reward since it's aggressive. But aggressive versus a conservative trader means that since conservatives have more confirmation and more conflict and less aggressive, they're gonna have stop outs a lot less. Aggressive traders are gonna have more stop outs, but they're gonna have higher risk rewards. So this comes to the close of the video, and I want to introduce you to the action step. So using the framework provided, identify order blocks with advanced market structure. So advanced market structure is long-term perspective, intermediate-term perspective, short-term perspective, classifying all these swing points, and then using that framework, identify the order blocks. So after you have classified your swing points, start identifying order blocks drawing to your higher time frame objectives. We know that intermediate term highs and intermediate term lows swing price towards the higher time frame objective. And these are the charts I want you to screenshot, and I want you to mark it up for yourself. Okay, using Paint or whatever you want to use, Photoshop, do your homework on these charts.